Hello, good morning, class. So today I'll be discussing the last two chapters of our BAM 031. So these are modules number 23 and 24. At the end of this module, I should be able to calculate the RC or regular corporate income tax. I believe na napasadahan na rin natin to before. But for the purpose of our discussion, i-reiterate ko na lang siya. Then I'm going to explain as well yung corporate gross income tax, then the improperly accumulated earnings tax or AIT, and the branch profit remittance tax. Let's start. Just to give you an overview, so these are the 7 corporate taxes and categorized siya into 3. So we have the standard income tax. So ito yung mga natapos na nating discussin. Yung net income tax on ordinary income, the final withholding tax on passive income, and the capital gains tax on capital gains. So meron na lang tayong 4 remaining classification of taxes na i-discuss. So categorize siya into penalty income tax and special income tax. So when we say penalty income taxes, ito yung mga taxes na ini-impose ni BIR sa mga corporations as a form of penalty. So yung minimum corporate income tax, from the term itself, minimum, if you're incurring loss, corporate loss, no, meron ka pa rin babayaran na income tax. So hindi pwedeng wala. So ito yung tinatawag na minimum corporate income tax. So ang basis nito would be the gross income. So yun yung MC. And then yung improperly accumulated earnings tax. So ito naman, applicable to dun sa mga closely held corporations, especially kapag para ma-avoid yung nagre-retain ng daming masyado na income, yung hindi dinideclare as dividends. And the remaining 2, the special income taxes, yung gross income tax, and then branch profit remittance tax, na di-discuss natin further later on. So, ito, as discussed before, ito lang naman yung regular format sa income tax return on how to compute the regular corporate income tax. So we have sales or the revenue receipts depending on the type of business. Tapos deduction ng cost of goods sold or cost of sales or cost of service. And then that will be your gross income from operations. Then you need to add other taxable income na hindi subject sa final taxes. Then yun yung total gross income mo for income tax purposes. Then the itemized deduction or OSD depending kung ano yung pinili mo during the first quarter of the taxable year. And then that will be your net taxable income times the corporate tax rate, which is 30% prior create. Later pala, i-discuss ko din yung mga major changes due to effectivity ng create natin. So yan lang yung dapat yung tandaan. Sales, then less of cost of goods sold or cost of sales, then other income not subject to final taxes, less the allowable itemized deduction or OST times the corporate income tax rate. So next, gross income tax. So under section 27A of the tax code, ito yung other privilege na grinant ni BIR. But meron siyang mga requisites or requirements that need to be met bago ma-avail tong privilege na to. So the corporations at the option to be taxed at 15% of gross income as defined in the tax code instead of the regular 30% net income tax. So applicable lang siya sa domestic and resident foreign corporations. So what are the requisites? Una, dapat meron tayong tax ratio effort of 20% of gross national product. So yung gross national product, ito yung total value of goods produced and services provided by a country during the taxable year, equal to the gross domestic product plus the net income from foreign investment. Another requisite is yung ratio of 40% of income tax collection to total tax revenues. Third one, yung dapat VAT tax effort of 4% of GNP. And then last one, yung 0.9% ratio of the consolidated public sector financial position to GNP. Then may additional requisite lang din that the option shall be available only to firms whose ratio of cost of sales to gross sales or receipts from all sources does not exceed 55%. So ito medyo kung mapapansin niyo, medyo madami siyang requisite na parang mostly, beneficial lang kay government. Based on my experience, parang wala pa akong, client before na na-handle na nag-avail nitong, privilege na 'to, yung gross income tax. Ang usual yung gross income tax rate, yun yung applicable naman sa mga, entities enjoying incentives like yung mga entities registered under PEZA, Philippine Economic Zone Authority or Board of Investment, BOI. So sila meron din silang tinatawag na GIT incentives or gross income tax incentive which is 5% naman. So magkaiba yun naman dito. Yung GIT, yun naman yung incentives na binibigay ni government. Kasi itong mga entities registered under PEZA, ito yung mga nagbibigay ng additional employment sa Pilipinas. Tapos ito yung mga activities na usually pioneering activities, pioneering services. Like for instance, yung mga BPO or mga shared service companies natin. So magkaiba yun. Baka malito kayo. Pero same term na gross income tax kasi ang magiging tax base nito is the gross income. Next is the minimum corporate income tax or MCITs. MCIT. So sino yung mga liable for minimum corporate income tax? So applicable siya kay domestic corporations and resident foreign corporations. So prior create, ang rate natin is 2%. 2% of the gross income. The taxpayer shall pay whichever is higher between the MCIT and the regular corporate income tax rate. So yun yung yun yung catch. Palaging merong babayaran. So yun nga yung minimum gross income tax. Kapag mas malaki naman yung mako-compute natin na RCIT as compared to the MCIT, of course yung RCIT yung babayaran. So hindi rin pala assurance na kunwari hindi siya loss. So RCIT na agad yung babayaran. So we need to also first compare yung MCIT doon sa RCIT. Kasi may cases na yes, hindi nga siya loss, meron siyang RC. Pero pag if you're going to compare the amount of minimum corporate income tax, which is the MCIT, as compared dun sa RCIT niya, mas malaki pa rin. So of course, dun tayo sa mas malaki. Dun sa mas malaki yung earning ni BIR. Dun sa kung saan yung mas malaki yung revenue, saan yung mas malaki mariremit sa kanila. So yun yung tatandaan nyo for MCIT, from the term itself, minimum corporate income tax rate, kapag operating loss si company, most probably MCIT yung babayaran sa kanya. Pero kapag may RCIT din siya, meaning may gain, so may corresponding tax siya using the regular corporate income tax rate, we need to compute also the MCIT kasi i-compare natin ano yung higher. Kasi kung ano yung higher, yun yung ipa-file natin or yun yung babayaran natin as corporate income tax during that particular taxable year. So ano ang basis natin? For sale of goods, if you're an entity na nagbebenta ng goods, the term gross income shall mean gross sales less sales return, discount, and allowances, and cost of goods sold. Ito yung on the assumption that these sales return, discount, and allowances, and cost of goods sold are all properly substantiated for income tax purposes. So for cost of goods sold, this shall include all business expenses directly incurred to produce the merchandise to bring them to their present location use. For sale of services naman, gross income means gross receipts, less sales, returns, allowances, discounts, and cost of service. So for cost of service shall mean all direct costs and expenses necessarily incurred to provide the service required by the customer and clients, including yung salaries, mga employee benefits of personnel, consultants, and specialists na directly nagre-render ng service, and then cost of facilities directly utilized in providing the service, such as yung mga depreciation ng mga equipments or yung cost of supplies. Kapag banks naman, yung cost of service includes the interest expense. However, please note that according to the regulations, the gross income will also include all items of gross income enumerated under the Section 32 of our tax code, whether or not derived from the taxpayer's core business. Kaya napaulit-ulit kong dinidiscuss, when it comes to additional to gross income or yung income ni taxpayer, regardless kung directly registered siya dun sa core business niya, i-include natin. Pero when it comes to expenses naman, only those directly registered or directly related dun sa business ni company yung allowable expense. So kasama dyan yung mga income exempt from income tax and income subject to final withholding tax. So ang effectivity ng MSIT is during the fourth taxable year, immediately following the year in which such corporation commenced its business. So during the first 3 years, hindi pa pwedeng i-impose tong minimum corporate income tax rate on the rationale na ito yung kumbaga grace period na binibigay ni government. Of course, kasi if you're nagsisimulang business, most probably losses talaga yan during the first place. Kasi maraming mga capital expenses. So doon talaga yung bugso ng mga expenses mo. Kaya most probably loss position ka during the first 3 years. Kaya yun yung grace period na binibigay ni government. Kaya during the first 3 years, hindi ka pa i-imposean ng minimum corporate income. However, in the fourth taxable year, doon na mag-start yung applicability ng MSIT mo. Another thing to consider is the carry forward of excess minimum tax and excess of the MSIT over the RSIT in a particular year shall be carried forward and credited against the regular income tax for the 3 immediately succeeding taxable years. So additional privilege din yun, no? If meron kang any excess ng MSIT mo over nung RSIT, pwede mo siyang ma-carry forward for the next 3 years. And then domestic corporations not subject to MSIT. Of course, kapag subject ka sa RSIT, hindi ka na masasubject sa MSIT kasi either of the two lang naman doon. And then the following shall not be subject to MSIT as well, yung domestic corporations operating as proprietary educational institution kasi subject sila doon sa fixed rate na 10%. Also, domestic corporations engaged in hospital operations which are not profit subject to 10%. And then domestic corporation engaged in business as depository banks under the expanded foreign currency deposit system, other known as the FCBUs. So hindi rin sila subject sa MSIT on their income from foreign currency transaction with non-resident offshore banking units in the Philippines, local commercial banks, including branches of foreign banks and other depository banks. Also, from their income from foreign currency loans granted to residents of the Philippines under the foreign currency deposit system, subject to 10% final tax. And lastly, firms that are taxed under special income tax regimes such as PEZA and TIEZA registered, availing yung 5% GAT incentives. So meron ding mga resident foreign corporations na hindi subject sa MSIT. So the minimum corporate income tax shall apply only to resident foreign corporation which are subject to regular income tax rate. Resident foreign corporations engaged in business as international carrier subject to tax at 2.5 of their gross Philippine billings. So itong mga special corporations kasi nito, meron silang corresponding fixed rate na hindi sila yung subject dun sa regular income tax. So ito yung mga special corporations. Another one is the resident foreign corporations engaged in business as offshore banking units, mga OBUs natin. So same na income from foreign currency transaction with non-residents and other offshore banking units, local commercial banks, including branches of foreign banks. And their interest income from foreign currency loans granted to residents of the Philippines subject sa 10% final tax. Also, yung mga resident foreign corporation natin engaged in regional operating headquarters or mga ROHQ na merong 10% fixed rate din. And also, yung mga corporations registered under TIEZA and TIEZA, availing the 5% GIT incentives. Meron din tayong tinatawag na relief from minimum corporate income tax. So the Secretary of Finance, upon recommendation of the Commissioner, may suspend the imposition of MSIT upon submission of proof that the corporation sustained substantial loss on the account of the following. So pwede naman yun i-waive ni Commissioner, no? Pero meron lang mga corresponding process, of course, na need mong i-follow. May mga documentary requirements ka din na need na i-submit para ma-i-waive yung minimum corporate income tax imposition. So kapag meron kang prolonged labor dispute, so yung labor dispute, yun yung disagreement between employer and employees regarding the terms of the employment. Tapos this could include dispute regarding conditions of employment, fringe benefit, hours of work, tenure, and wages to be negotiated during collective bargaining or the implementation of already agreed upon terms. So pwede rin kapag nagkaroon ng force majeure, of course, expected that you'll be incurring losses kapag may mga ganyang events. And also because of legitimate business reverses. So itong mga cases na to, need mo lang mag-submit ng mga requirements, need mong i-inform si commissioner para ma-waive yung imposition ng minimum corporate income tax. So what are the rules in computing the MC? So yung excess MC, if any, for the year is computed annually. That is in the fourth quarterly annual return. Tapos yung quarterly tax shall be the higher of the RCT of the MC. Kasi di ba nagpa-file din tayo ng quarterly income tax return. So every quarterly filing, nagko-compute din tayo ng RCT and MC. So during those quarters, kino-compare na natin if ano yung higher. Then kung ano yung higher, yun yung ipa-file natin or babayaran natin or i-remit natin kay BIR. If the quarterly tax due is the MCT, the excess MCT from previous taxable year shall not be allowed to be credited. However, creditable withholding tax, quarterly income tax payments paid in the previous year quarters, and the excess tax credits of the prior year are allowed as credits against the quarterly income tax due. So if you would recall, meron tayo yung mga applicable or allowable na mga tax credits. So una diyan yung creditable withholding tax. Ito na yung na-discuss natin before na ito yung mga wini-withhold ng mga withholding agent ng BIR dun sa mga income payments natin. So aside from receiving the whole amount of income, nagwi-withhold na yung mga customer natin ng amount of income tax. So ito yung pwede nating i-credit dun sa tax due natin at the end of the year. Meron din tayong of course yung quarterly income tax payment kasi kapag nag-annualize tayo, di ba? Yung mga previous quarter na nakapagbayad na tayo ng tax, i-accumulate natin yan as tax credit for the year. And of course, yung mga excess tax credits natin during the prior year. If excess tax credits position tayo during the previous year, pwede natin siyang ma-carry forward as tax credits. Next one, if the quarterly tax due is the RCT, ayun, ang mga pwede natin tax credit is yung excess MCT from the previous taxable years, plus yung previously discussed natin yung CWTs, yung quarterly income tax payment, and the excess tax credit of the prior year. So yun lang naman kaibahan. Of course, if MCT ka, hindi mo pa siya pwedeng i-claim yung mga excess MCT mo. Pwede mo lang ibawas doon kapag RCT position ka na ulit. This slide naman, ito yung major changes natin due to the effectivity of Corporate Recovery and Tax Incentives for Enterprises Act or the what we call CREATE. So, ang major changes niya talaga are the rates ng corporations, tapos yung mga incentives dun sa mga entities registered under PEZA and other like BOI, yung mga nag-grant ng mga tax incentives. So RA number 11534 or CREATE was signed into law by President last March 26, 2021. So it took effect 15 days after its publication. So ang effectivity date niya is April 11, 2021. So ito yung mga major changes. For domestic corporation, ang rate is pwedeng 20% or 25% depending on the threshold na papasukan mo. So ano mga need nating consider dun sa threshold? Yung amount of asset and amount of taxable income. If you have asset more than 100 million and if you have taxable income more than 5 million, you'll be taxed at 25%. However, if you have asset equal to 1 million and below and taxable income equal to 5 million and below, itatax ka lang ng 20%. So dun sa computation natin ng asset, excluded yon yung amount ng land where the PPEs are stated. Ano pa yung major changes ng CREATE? So aside from the regular corporate tax rate for domestic corporation, binawasan din natin yung minimum corporate income tax rate. So from the 2%, no, prior CREATE, binabaan natin to 1%. So applicable lang siya for domestic and resident foreign corporation and when MCTs due is greater than RCT. Another thing na need nating i-highlight dun sa effectivity ng CREATE, yung EIT o yung Improperly Accumulated Earnings Tax is repealed. So it's no longer applicable. So hindi na need mag-compute nung Improperly Accumulated Earnings Tax. So na-repeal na yan ni CREATE. And then for non-resident foreign corporation, from 30% na regular corporate income tax rate, they'll be taxed now at 25%. So kung mapapansin nyo, binabaan, no? Binabaan mostly ng rates. Actually lahat binabaan. Yung for domestic corporation and non-resident foreign corporation, even the minimum corporate income tax rate. So binabaan yan. This is on the rationale na di ba nga during this nung moment na pinas yan, actually until now naman we're still na pandemic. So ito yung response ni government as help, as relief dun sa nararamdaman na crisis ng mga corporations natin. And then also for non-deductible interest, so merong 20% interest reduction for RC. Then for training expenses, meron siyang additional incentives na binigay, additional 50% deduction of the value of labor training expenses for skill development and enterprise-based trainees. And then for exemption of foreign source dividends from foreign corporation to domestic corporation. So ito dapat yung mga requirements na kailangang ma-meet bago maging entitled dun sa exemption ng foreign source dividends. So at least 20% of the outstanding shares of a foreign corporation is held for a minimum of 2 years at the time of dividend. Then funds are reinvested into domestic corporations' business operations in the Philippines and reinvested within the next taxable year from the time the dividends were received, and then reinvestment shall be for working capital requirements, capital expenditure, dividend payments, investment in domestic projects only. So another thing to attract investors, foreign investors, tong privilege na to. Okay, even though repealed na yung EIT, discuss pa rin natin yung idea behind it for the purpose of our discussion para alam nyo lang din. Pero ayun, since repealed na siya, I believe hindi na to i-ask pa itong mga question related about EIT. Pero para na lang din may idea ko yun, ano yung concept behind, sige, di-discuss natin. So ano bang concept behind the EIT or the improperly accumulated earnings tax? So in order to compel corporations to distribute or pay dividends to stockholders, the retention or accumulation of earnings of profit beyond the reasonable needs of the business is made subject to tax. So yun yung sinasabi ko. Meron kasing tendency na yung mga corporations na to, i-retain nila yung profits nila, di ba? Instead of declaring as dividend dun sa mga stockholder nila, nire-retain nila. So yun yung objective nun para mapigilan or ma-avoid yung mga ganong instances. So the EIT is imposed upon corporations which are formed or availed of the purpose of avoiding the income tax with respect to its stockholders or the stockholders of any other corporation by permitting earnings and profits to accumulate instead of being divided or distributed. The EIT is an additional tax to the regular corporate income tax imposed on corporation under Title II of the Tax Code. So ano-ano yung mga corporations subject to EIT? So taxes imposed on improperly accumulated taxable earned starting January 1 of 1998 by domestic corporation which are classified as closely held corporation. So yung hindi lahat ng corporation subject sa EIT. So yung mga domestic corporation lang na mga closely held. So a branch of foreign corporation is not liable for the EIT, the same being as a resident foreign corporation. So ano ba yung mga closely held corporations na tinatawag natin? So these are the corporations where at least 50% in value of the outstanding capital stock or at least 50% of the total combined voting power of all classes of stock entitled to vote is owned directly or indirectly by or not for not more than 20 individuals. So, dalawa yung basis natin, no? Yung amount ng capital stock and amount ng voting shares. So, kapag yung more than 50%, at least 50%, pag nag 50% and up, mako-consider na siya as closely held corporation kapag yung 50% and up na yun, nung capital stock or nung voting power ay owned directly or indirectly ng not more than 20 individuals. So usually, ito yung mga corporations na family yung may-ari, then most of its major stockholders ay magkakamag-anak din or magkakapamilya. So instead of distributing yung dividend na masasubject sa taxes, i-retain na lang nila yon, i-retain nila yon sa company nila, dun sa corporation. So ano na yung mga corporations na hindi subject sa EIT, na hindi mag-a-apply? Of course, yung mga banks, yung mga insurance companies, mga publicly held corporation, taxable partnership, general professional partnership, mga non-taxable joint ventures, and then yung mga enterprises duly registered with TIESA under RA 9593, TESA under 7916, and enterprise registered pursuant to the Basis Conversion Development Act of 1992 under RA 7227, as well as other enterprises duly registered under special economic zones declared by law which enjoy payment of special tax rates on their registered operation or activities in lieu of other taxes, national or local taxes. So, paano mag-compute naman nung EIT natin? So, EIT is a fixed rate of 10%. So, it is based upon the improperly accumulated taxable income for each taxable year. So, ito yung formula. Yung current year taxable income, tas i-add back natin yung mga income exempt from tax, income excluded from the gross income, income subject to final tax, and the amount of null for deducted. So technically, lahat ng income natin, regardless if exempt ba siya, kung na-subject na siya sa final tax, or exclusion siya sa gross income. Basta lahat ng mako-consider na taxable income ni corporation. So i-add back natin siya. Then i-less lang natin yung mga dividends actually or constructively paid from applicable year's taxable income, then yung mga income taxes paid or payable for the year, both income and final taxes, and the amounts reserved for the reasonable needs of the business from the applicable year taxable income or 100% of paid up capital, whichever is higher. Then yun yung improperly accumulated earnings tax natin. Then multiply lang natin ng 10% na fixed rate. Then yun yung babayaran na additional tax nitong mga closely held corporation na merong improperly accumulated taxable income. So please take note of the following. Once the profit has been subjected to EIT, the same shall no longer be subjected to EIT in later years, even if not declared as dividend. So one-time imposition lang siya. Kapag na-subject na sa EIT yung income, hindi na siya pwedeng i-subject ulit, even if hindi pa siya ma-declare. Kasi na-meet naman na yung objective natin noon, objective ng EIT, na ma-subject siya sa tax. Notwithstanding with the imposition of EIT, profits which have been subjected to EIT when finally declared as dividend shall nevertheless be subject to tax on dividends imposed under the tax code except in those instances where the recipient is not subject thereto. So yun din yung additional na natin, parang kahit na na-subject na sa EIT pero later on dineclare mo siya as dividend, masasubject pa rin siya dun sa should be na dividend na taxes ng mga dividend na yun. So para in a sense na parang double taxation tayo, no? Pero mind you that EIT is a penalty tax, no? Kaya nga tayo nag-i-impose ng ganun para sa mga companies na instead of retaining yung amount ng profit nila, i-declare na nila as dividends para hindi magkaroon ng double taxation in the sense na matataxon siya on the usual tax on dividends and tax nung as penalty tax nung EIT. So period for payment of dividend or payment of EIT, the dividends must be declared and paid or issued not later than 1 year following the close of the taxable year. Otherwise, the EIT, if any, should be paid within 15 days thereafter. Meron din tayong EIT return or the BIR Form 704 shall be filed within 15 days after the close of the year, immediately succeeding a taxpayer's covered taxable year. Last, special tax, yung branch profits remittance tax. So, ito lang naman yung tax na ini-impose dun sa profit na nire-remit ng branch of a foreign corporation to its head office. So this includes any income derived from Philippine sources by the ROHQs of a multinational corporation when remitted to the parent company. So ang base natin dito is 15% final tax on the total profits applied or earmarked for remittance, except those activities which are registered with PEZA, SBMA, CDA, and TIEZA. So ito mga to kasi, itong mga registered ano ito, meron silang separate rules and regulations. Kaya in-exclude natin sila dito sa mga special taxes na to. And then, please take note na yung income na kinukonsider as branch profit ay dapat yun sa mga related lang or connected dun sa trade or business natin. Hindi kasama doon yung mga other income like mga dividends or yung usually mga passive income na hindi related or hindi connected dun sa trade of business in the Philippines. So tax treaties, kapag meron tax treaties, of course, i-honor natin yun. So the rate may be reduced by international treaties which the Philippines is a signatory. So meron din tayong forms to be filed, yung monthly remittance form ng final taxes which is the BIR form 0619F, and then yung quarterly remittance tax of final tax BIR form 1601FQ, and yung annual information return for final withholding tax which is the BIR form 1604F, shall be filed in paying the BPRT. Kasi in effect, no, totong BPRT is a form of final tax. Sige, so I think that is the last slide. Please take note na lang din of the following important dates. So unang-una, your quiz 5 or your final quiz covering all topics from prelims to finals. So that will be on March 24, Thursday, 3 to 4 p.m. So G-form lang din ulit siya, same with usual ano natin. And then yun, expect a multiple type question. Siguro mag-include din ako ng konting supply the answer, especially pag computation siya. Tapos, for your final term exam, covering all topics as well, in preparation na rin sa common final examination nyo. So, 75 items yun. Sa Saturday naman siya, March 26. That will be on March 26, 2022, 1 p.m. to 4 p.m. So, 3 hours siya. Same, multiple choice, and then supply the answer. Then for your common final term examination, so that will be 40% of your final grade. Tinanong ko si Dean last week, sabi niya prepared na daw yung question, but nag-ask ako kung if pwede ko siyang makita no bago nyo i-take yung exam, kasi para lang ma-ensure ko na walang mga outdated question, kasi ang worry ko baka may mga na-include silang outdated question doon. Similar with your modules kasi meron mga outdated question na doon. So yun sana yung gusto nating ma-avoid para din sayang kung outdated na tapos na-include pa siya doon sa final exam niyo. So 40% yun, tapos face-to-face siya. So sa March 29, 2022, 1:30 p.m. So yung further details will be shared by your advisor kasi sila yung magpa-facilitate nung face-to-face final examination nyo. Then, remind ko na lang din everyone to please accomplish your modules kasi requirement siya. Kapag hindi nyo na-submit yun, you will be marked as incomplete. So ayun, this will be the last discussion for the SEM, and good luck sa remaining quiz and examinations. Thank you everyone.